Now, one of the biggest mistakes new traders make is believing that profitable trading requires a complicated strategy with 10 indicators and dozens of rules. Now, in reality, most traders don't fail because their strategy is so simple. They fail because they don't actually have a strategy at all. Now, they enter trades based on emotions, social media posts, and whatever looks good in the moment. Now, in this video, I'm going to show you exactly how to build a simple trading strategy from scratch using a framework that anyone can follow. And by the end of the video, you'll know how to identify an entry, where to place your stop loss, where to take profits, and most importantly, how to create a repeatable process. Now, before we build a strategy, let's define what a strategy actually is. Now, a trading strategy is simply a set of rules. That's it. That's as simple as it gets. Every strategy needs 4 basic components. First, what markets you are trading: Bitcoin, stocks, or forex. Second, what conditions must be present before you enter the trade. Thirdly, where do you admit you're wrong and exit the trade? And fourth, where do you take profits if the trade works out? Now, if you can't answer all those 4 questions before entering the trade, then you're not really following a strategy, you're guessing. Now, let's build a simple strategy together. So the first thing we need is a setup. A setup is simply the pattern we're looking for over and over again. For this example, we're going to use one of the simplest setups possible: trading pullbacks in an uptrend. The rules are very, very simple. Rule number 1, price must be making higher highs and higher lows. Number 2 would be that wait for a pullback instead of tracing the price. So you can see we are making higher highs, also higher lows. Higher low, higher low, higher low, higher high, higher high, higher high. So we wait for the pullback towards this support level. This is the area where we would enter the trade. We wouldn't chase the momentum of this move and try and come for a trade and trying to guess where it's going to come to. So we actually wait for the pullback towards that key support area. This immediately removes a lot of bad trades because we're only looking to buy when the larger trend is already moving higher. So instead of fighting the market, we're actually trading with it. Now, next we need an entry rule. This is where many traders actually become very inconsistent. They sometimes enter very early, sometimes late, and sometimes they don't even enter at all. So for example, when price pushes back into the support area, then wait for the bullish candle to close. And only after that confirmation, we actually enter. Notice how simple that is. There's no guessing. The market either gives us the setup or it doesn't. And if it doesn't, then we simply wait. And now let's talk about stop loss. This is where traders actually get very, very emotional. Now, a stop loss isn't there to punish you at all. It's actually there to protect your capital. So in our example, the stop loss would go below the support level that we are trading from. Why? Well, because if it breaks below that area, then the setup is no longer valid. And that's perfectly fine. Professional traders don't actually try to avoid these losses. They try to keep them as small as possible. Next, we need a profit goal. So one of the easiest ways to do this is by using risk to reward. Now let's say we're risking $100 on a trade. If our target is $200, that's a 2-to-1 risk reward ratio. This means we don't need to win every single trade to be profitable. Even if we only win half of our trades, we could still come out ahead over time. Now this is a huge mindset shift for traders. The goal is to make more when you're right than you lose when you're wrong. And now before actually risking any real money, there's one final step: testing. Go back through historical charts and find every example of your setup. And now record the results. How often does it actually win? What's the average risk to reward ratio? How does it perform in trending markets, and how does it perform in choppy markets? So most traders actually skip this step and then wonder why they lack the confidence. And confidence doesn't come from hope. Confidence comes from data. So the more evidence you gather, the easier it becomes to follow your rules during live trading. Now, before we finish, if you guys are currently looking for a platform to trade on, then look no further than Evedex. Now, Evedex is a fully decentralized trading platform that's currently running competitions, prize pools, and trader rewards. Now, traders have the chance to win prizes such as iPhones, AirPods, and Apple Watches. and other rewards through their various events and campaigns. Now, what makes Evedex stand out is that they combine decentralized trading with a competitive environment where you can actually climb leaderboards and compete for prizes. Now, if you'd like to check that out for yourself, the link for that will be down in the description below. So if you had to take one thing away from this video, let it be this. A profitable strategy doesn't need to be complicated. You need a setup, an entry rule, a stop loss rule, and a take profit. And when you test it, that's how you build consistency in trading. Now, if you found this video helpful, then make sure to subscribe and let me know down in the comments below on what trading topic you'd like me to go through next. Now, as always, hit that like button, it'll be greatly appreciated, and I'll see you all in the next one.